Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. Corn futures for us currently sits at a very critical zone. We talked about the importance of the market being able to hold above our 2x1 timing angle, while at the same time it's found a bit of resistance at our 2x1 downside angle. Just above, we can see where our intersection of these key points did make for a very good high for this market, and the market made a reasonable low earlier in the week, and as long as it's able to hold above the 393 support level that we discussed before, we believe that the market can find its way a little bit higher. We can see based off of the previous highs that it's made in comparison to the momentums that it's had, we do see a bit of price divergence coming in for this market. If it's able to overcome and find new strength and come in and break to new highs, then this market could very well make its way up to about 420 prior to coming off the board. It's going to be very important for this market over the course of the balance of this week and next week to be able to find good strength above 395. And in doing so, we do think that the market can break to new highs, but again, it's going to be very contingent upon the market being able to hold recent support levels. If you recall from last week, we talked about the significance of the market being able to hold up above our timing angle, and you can see very clearly that the market has found very good support up against this natural angle over the last several times that it has tested. We're now testing at the 180-degree mark at 401. If the market's able to close above this number of 401 this week, we're predisposed to believing that the market could very well retest previous highs. But again, we'll notice that the market did make a very significant high up against our tangent to our arc swing right at the 408 quarter number. Being able to break above this number next week tells us that the market could very well make a run, and the next two potential targets that we're looking at sit at 415, then at 420. The December contract is showing us a very similar action where we can see the intersection of our 1x1 angles was the key resistance for this movement. And we can see that the market has been actually trading inside of a very natural 2x1 and 1x2 timing channel. This channel or tunnel that we're seeing, the market has maintained the lower end of the tunnel itself. Being able to break above the top side of the tunnel suggests that the market can find itself in the position of continued strength. But as long as it stays on the downside or below this tunnel, then we look for potential resistance to hit each time that it tests near this 1x1 angle. Right now, the key level of operation that we would be looking for would be the 415 number, which is one standard deviation above the point of control. Should this market be able to close at the balance of this week above this recent resistance, we think that the key level at play for next week would be that 415, and closing above 415 suggests that the December coin could very well reach the 425 number in a not too distant future. Most recently for this December contract, it's been channeling right at about that 419 number that we've discussed previously. And we can see that over the last 2 to 3 weeks that half of its time has been spent slightly above and the other half of the time has been spent slightly below. This market clearly needs to clear this 419 number if it is to find some strength. And as suggested before, the next level that we'd be looking at would be 2 standard deviations beyond the point of control that sits at the 425 mark. As long as this contract is able to close above this number to close the week, we do believe that the potential for continued strength on the upside is where we would see the market hovering over the course of next week as we move into the Memorial weekend. And upon doing so, then the potential for continued strength moving up into that Memorial weekend is plausible. Soybean, on the other hand, has found itself on the side of weakness. And now what we're experiencing, given that we've seen 3 consecutive lower highs, that the market now is forming for itself the potential for a continuation pattern to the downside, where we would see a move of the length from the 1065 down to about 1025, about 40 cents, looking for another 40-cent move below where the market currently is right now if it's not able to find some good support sitting at our volatility-based support zone. The market has crossed below our 180-degree mark of 1014 3/4, and it very much needs to regain this level if it is to find some strength overhead. Below this number, we think that continued strength is on the horizon, and the first primary near-term target that we'd be looking for is 983, with the potential at the very least of retesting previous key lows and perhaps even lower. The next opportunity for potential support sits at about 992 for this contract, followed by 987 just below. So we'd like to see at the very least as we close out this week that this 992 number hold, and possibly if it were to close above recent resistance, that would even be better. But for now, this continuation pattern that we're looking at does not look very good, and we're predisposed to thinking that this market could very well look to move down if it breaks below this 992 number below. The November contract is following suit, and we can see the way in which the market has been moving down is consistent with an increase of momentum to the downside. This does not bode well for soybean in general, and right now we're sitting at potential support at our 2x1 timing angle, but below this level, we do believe, similar to the July contract, that continued weakness could very well be in play, although this continuation pattern is not as pronounced as it is for the July contract. Right now, we're looking at a potential downside target of about 989 1/4, and below that mark, we're looking at the market trading somewhere in the neighborhood of 977 to 978. That 977 number happens to be right at our point of control number for this contract on its way down, and right now, near-term support downside at the 180-degree mark is going to be very important for this market. The one thing that looks to bode well for this contract is that it's sitting right in the midst of volatility-based support between 990 and 1005. So if the market is in fact able to hold these levels this week and perhaps going into next week, at the very least we can see some potential sideways consolidation, but for now the narrative for soybeans suggests that lower prices are in fact on the horizon. Wheat futures continue to move very well across our projections. We talked about the market making a move to the upside, and it did just that, eclipsing previous highs and reaching our minimum price objectives. Since then, we've seen a nice correction, but we talked about the importance of holding above 484.5 if the market were to continue higher. It did just that, and over the last 3 to 4 trading days, the market has made its way up very nicely. We're now sitting up against resistance right at about 508, but we think that closing above this resistance level suggests that the market could in fact make one more potential run to the upside, where we could see a move that potentially tests 560 prior to coming off the board. The move today is right up against the point of control number of 507.5, and what we'd be looking for next is this key level of 524 3/4. If this market's able to close above this number next week, we are predisposed then to believe that an advance that goes up to first test the 547 3/4 and then higher up to about 560 or 570 could very well be on the wings for wheat. For now, we'll continue to monitor simply the way in which it's moving. We're up against a potential resistance level right now, but we do like very much the way it's been moving over the past couple of days. The market looks to have some very good strength in early trading, and as we continue to monitor the way in which this market is moving, we're going to pay very close attention to this timing angle just above. This timing angle is going to give us a very good indication as to whether or not sustained strength is possible. And so if and when this market makes it above this level, remaining above this angle is going to be very important to the continued sustained strength that we're looking to see in the wheat performance. We'll close out with the US dollar, and after having performed a very small pullback up against our 1.272 level of 92.63, we can see that the dollar has now been in the midst of another key advance and is now very close to reaching that 93.88 number that we talked about previously. The strength in the dollar continues to amaze, and now as we look at our volatility bands, the steepness of the slope continues to be very strong to the upside, as well as down below, we're noticing that the market now is going to give us potential support at higher and higher levels. The dollar, now that it has crossed over this 1.272 number, suggests that potential strength now could very well be in the cards for some time. And so as we monitor the US dollar with its key levels, getting above this 93.88 number is going to be very important. And as long as this market stays above this 1.272 number over the next couple of weeks, we're looking for continued strength for the dollar, perhaps at the very least through the month of June. The weekly chart reveals for us the fact that the market now is very much poised to retest previous highs at the 95.15 number. And with the volatility bands on the higher time frame sloping down a bit, we look to find our first set of resistance, potentially in the form of a lower double top coming in inside of the market here. And if the market's able to blow through these areas after potentially testing these volatility bands, this is going to be the key area for us that helps us understand the nature of the strength that the dollar looks to be moving into right now. Thank you so much for joining us for our regular market update. Look forward to touching base with you again next time.